In today's episode, we welcome Samantha LaDuc to the show. Samantha is the founder of LaDuc Trading, located in Andover, Massachusetts. She began falling in love with the markets back in 2008, which was the beginning of the financial crisis. And while lacking any formal training or education, Samantha embarked on what has been a 15-year career of excellence in finance, stock trading, and investment advice. All of my long-term listeners must imagine how excited I am to welcome a guest of Samantha's caliber to the show. I love meeting and learning from my guest on this show, and Samantha is cut from the most elite cloth of my guests yet. She shares the amazing story of how she self-taught and learned from people who she knew understood the market better than she did. Embarking on this journey for her has been very fulfilling and a lifelong dream of hers to own her own business and stock trading company. She is so passionate about the market and about teaching people, engaging with the market and the world of finance. We talk about options. We talk about what it takes to grow yourself into a respected contributor in the world of finance, one that's dominated by men. So Samantha comes to us a trailblazer and trendsetter. I get to ask some of the most nerdy questions that I've asked any guest on this show before, and Samantha was kind enough to indulge me and also educate me. I got free advice from somebody who gives out professional stock trading and market advice on a daily basis. How lucky am I to be doing this? Samantha is also the first guest on my show that I don't know in any way. We met through a mutual contact, Liesl Clark, who was my most recent guest on the podcast, and she linked up Samantha and I, and the rest is history. Samantha and I met via Zoom and had a wonderful 2-hour conversation that's edited down into the version that you're about to listen to. I'm so grateful for all the recommendations of my listeners for future guests and for potential listeners in the future. Without you guys, my show cannot continue to grow, and I cannot continue to bring guests like Samantha LaDuc on to provide you guys with such amazing insight and information about what's going on in that world, in the world of a finance professional. Samantha is also kind enough to share with me and my listeners her predictions for what the market's going to do through the rest of the year and the election, and what's to come in 2025 as far as when the Fed is cutting rates and the flow of money through the country and out of the country. For me, it's really interesting. So I hope you enjoy this excellent conversation between myself and Samantha LaDuc from LaDuc Trading. Thank you so much to Samantha for coming on and spending time with me and delivering such great content. Very easy to edit and excellent to listen to. So sit back and relax and enjoy this conversation with Samantha LaDuc. Welcome to After the Checks Are Signed podcast. My name is DJ Garcia, and I'm joined today with Samantha LaDuc. She owns LaDuc Trading, which is a business that's based in Massachusetts. Her day-to-day life is analyzing stocks, watching the market, noticing trends. I noticed on her website that it lists macro to micro, so I'm going to ask her a couple of times about that. Thank you so much for coming on the show today, Samantha. It's great to have you and great to meet you. Generally, what I do in the beginning of my podcast is just pass the microphone over to you and give you an opportunity to tell the listeners who you are, what you do, how you got here. Just summarize yourself in any way that you like.
Well, thank you so much, DJ. I really appreciate this because we obviously met through a mutual friend, and I used to live in New Hampshire for many, many, many years and had 2 of my 3 children there. So I am now over the border and settled in Andover, Mass for 25 years. I have a fondness for talking market to anyone who is interested, since it's my daily grind, but I'm actually usually working with active traders and active investors as a macro to micro analyst, educator, and trader. So that means that I am literally staying in sync with the market to identify market trends, what's moving, why, and how to trade it. And then I translate that into actionable trades for clients, both retail and institutional. So what I try to do is bridge the gap between retail and institutional. I do live commentary every single morning, otherwise known as a live trading room, but it is not what most folks think of a trading room where they're chasing momentum stocks, day trading, chest pounding, and all that noise. I'm the only one commentating. I am explaining what's happening in the market, the sector rotation, macro event risks, what I have on for chase, swing, or trend trades, and then engaging with clients and asking, what's your time frame? Because everyone is basically trading their book, like yourself mentioned, right? You have your own portfolio that you manage. It's asking, okay, what is your particular time frame for this trade setup? And then let's take a look at it from macro to fundamental to technical. And then I throw in a whole bunch of other analysis silos, which means that some folks are very focused on macro and they run macro funds. They're looking at dollar and yields and oil, for example. I use that as my backdrop. I'm very, very focused on those big commodities and how they can intersect with market movements. But I also look at individual sectors and the rotations and the stocks within those sectors so that I can help size up the best performers and identify those as swing and trend trades for clients. And I'm also option focused. So I'm looking at how to manifest that trade using options, risk defined options. Again, depending on the time frame of how my clients want to represent that trade. So it's not just one and done. It is very much moving with the market. When Fed speak comes in, when NVIDIA has earnings, non-farm payrolls, there's all types of macro moving event risk. And I size up how it is bullish or bearish and help clients directionally position and or protect. So that's actually a really important part, because part of my job is not just to recognize alpha, but it's also when to protect and hedge during times of correction. So this is very, very important. So I look for policies first and foremost, and then how monetary policy, currency policy, fiscal policy, those are really, really three legs of the table of how we will have policy interference will impact interest rates. And interest rates, or specifically the treasury market, is the largest market in the world. And I do mean the world. This is critical for me to track interest rates very, very closely across all time frames. Again, this is also very helpful for clients because sometimes they're chasing, sometimes they're positioned, sometimes they're protecting. So I need to know what interest rates are going to do. My job is to predict market moves. So therefore, I must be in sync with interest rates. That's really key. Dollar FX is also ginormous, US dollars. 48% of all contracts are in US dollars. There's 9 trillion of dollar transactions every single day. It's not a small market. And more importantly, we have a lot of foreign countries that come in and buy our assets and our treasuries. So they're converting their local currency into dollar. I need to track that for when they're going to reverse that trade and go home. So that, again, impact of dollar movement is going to be very instrumental on fundamentals, on a company's earnings, revenue they derive overseas. That dollar impact, whether it's strong or weak, will very much be a tailwind or a headwind for their fundamental earnings. So see how it's all connected? So I have to follow interest rates on N dollar. And then oil is the largest commodity, and it's very much used as a currency. It's also used as a carry trade. Now, I know this is getting a little sophisticated already, but I'm just telling you.
I love it, but
I knew you would.
yeah.
So, but it really, really matters. That is why I'm focused on macro as a backdrop, fiscal, monetary, currency policies that will dictate price. And then specifically the movements of dollar relative to other currencies, interest rates across the whole curve or spectrum, and also commodities. So this is my big picture when I'm looking at every single day. But when I'm running a live trading room, it's sizing up what money is flowing into particular stocks or sectors so that we can put on actionable trades. And then I know what the guardrails are because of the macro. And I know what the event risks are because of the macro.
I appreciate the explanation, and it does make complete sense to me. I'm sure some of my listeners' heads might be spinning a little bit.
Let me just say one thing, that most investors are passive. Really, they're working their job and then putting money into a 401k or retirement. and it's passive. They oftentimes throw it over the wall. I should have said this at the very beginning. They throw it over the wall for a money manager or a portfolio manager, a fund manager, whatever, to manage their money. They go into this black box, right, where they don't really know what's going on with their money, but it is being managed. And I'm not that. I am not an RIA. I'm not a financial planner. I'm a market timer. I share my analysis, my insights with clients who manage their own money. I don't manage other people's money. So that's really critical to say. And the sophistication of someone with money is in different buckets, right? So you have someone who's just looking for capital preservation, and they usually invest it very safely with somebody who is making sure they don't lose money, especially in times of inflation. Again, I have nothing to do with them. Putting it into T-bills or money market funds or having somebody manage their money, that's typical industry jargon. Then you have folks that are looking for income on their whatever savings or wealth that they have accumulated. And then you have those who are looking to actually beat the market, or they're very speculative. So the folks that are more in the growth or speculative mindset and experience level are the ones who come to me.
This podcast is intended to talk about entrepreneurship, success, ways that people can grow their own personal wealth and their own personal outcomes. How did you decide that this is what you wanted to do? Was there any businesses that you had before LaDuc Trading, or did you just go from, I guess the better question is have you ever held a job on a trading floor or at a brokerage such as Fidelity, anything like that? And if the answer to that is no, then how did you take the leap to owning your own trading company and being so industry respected to provide those insights?
That's an excellent question. All right. So the first thing I would say is restriction is not my jam. When you go into a day job of working at Fidelity or any of these firms, very, very large machines, or you go into a position typically as an analyst, right? Or a fund manager, for example, or you start out really, you got to work your way up, but I have no patience for that. And they teach you what they want you to learn. And that's not my thing. I don't want to just focus on fundamentals or just macro. I want to scan and synthesize everything I possibly can about what the market is doing. I'm way ahead of the game because I have no restrictions, number one. Number two, the folks that are actually going out and doing sales to get your money to manage. It's a full-time job just to go out and sell to recruit money under management, right? And then to be good stewards of that money. That is a fiduciary responsibility. I didn't want either. So I am rogue. I am somebody who does not want restriction. I want to constantly learn. I want to learn. I want to go where I want to go in my mind to intellectually figure what the market is doing. It's a puzzle to me. And I couldn't do that if I was just in business development, looking for money to, manage, or managing other people's money, or working as an analyst or a fund manager or hedge fund manager for somebody else. That's not my jam. My idea was that I had a unique way of interpreting the market and then communicating that to clients. I would find clients that shared my worldview, and then I would share my insights and they would pay me in exchange for those insights. Along the way, I was able to grow a clientele. I was able to grow a reputation. And that then allowed me to hire other analysts and contributors who do the same thing. So now I have, instead of being on a trading desk for a firm, I actually have 10 contributors on mine. And I love that. And they're subject matter experts. So I have a client who was a brilliant biopharma analyst and trader, and now he's a contributor for LaDuc Trading, an options trader that managed hedges for billion-dollar hedge funds, is now one of my contributors. So I went out and was able to collect a team of contributors that very much specialized. I'm still the generalist. I'm still the one that is reading the market, the tone, timing. That's still my jam. And then I share it with clients. It's something I could not do working in a traditional financial services role. So I created my own role.
Were you always interested in the market? Do you have any education? I mean, I guess I'm looking for the origin. How did you go from a mom of three. I
Yeah.
gather you're a mother of three too. Now you own a well-respected, highly visible trading
And
company,
very,
and
yeah, very successful.
you
Yes.
have a clientele of appears to me potentially thousands. So I'm just wondering how you got to that.
I am very much someone who is not afraid of reinventing and going, and this is part and parcel of how I got here was in September of 2008, the Lehman Brothers had just happened, and I had previously sold my business a year and a half prior because my son, who was 4.5, had a medical emergency. So I had a company, small business. It operated in remote locations and Bellevue, Washington as well. So I basically was very used to working remotely with my staff until my son, 4.5, suffered a stroke.
Oh my gosh.
That rocked my world. And after 5 nights of ICU, I sold my business interests to 2 women who bought me out. So in my own company, I knew I would not be going back there for a while and I didn't want to anymore. So fast forward a year and a half, September 18th, 2008 is when I started with the markets. I had nothing to do with them before that, but I had interest in not only protecting that which I had earned, and I had not decided what business I wanted to go into because I had had the prior one for 10 years. And now my son is back in school and the market is starting to get very unstable. And I'm like, what about this money? I don't see any business I want to go into. I'm very interested all of a sudden in protecting this money. I need to learn how I can do this myself. Everything from that moment on was me looking for information. Everything I possibly could read, everything I could listen to. And I literally would find what looked like really good analysts or money managers or traders. And by the way, they're different. Those are 3 different mindsets: analysts, money managers, or traders. And I would find wherever they were, and I would go and shadow them. And I also went and I looked at Fidelity, and I went to New York and trying to feel out, I'm interested in this space, but I don't know enough about it. I don't have any friends that do this trading or analysis or money management, so I'm going to need to make some. And long story short, I self-taught to a point where I was obsessed. I loved it. I totally loved it. And I also learned what I was not good at. There was a lot of emotion that was going on also in my life at the time. Ultimately ended up getting divorced 2013, 2015. So when I went out and did this, hang a shingle outside virtually and said, okay, I have some following. Let's see where it goes. And it's literally when I started was after the divorce and said, okay, I've been doing this a little bit. I've learned some skills. I've also learned what I'm not good at, but I want to work on my voice. So I literally made it public facing. And then during COVID, I had no experience or comfort in public speaking. Commentating, not my face, but just charts and, commentating I could do till the cows come home, but actually engaging in public speaking, in webinars and podcasts and interviews, that was something I wasn't comfortable with, but I knew that I had to do it to get to the next level. So I forced myself. So I literally started during COVID wanting to attract more women because I had learned that 50% of all brokerage accounts that had been opened were by women. So you had a lot of people who were just coming into trading. And I wanted them to know that there was a safe place for them to come in and learn. And I wanted them to see me and hear me. So it kind of made that push. And then I hired people and got more comfortable in presenting. And then I was asked on CNBC, and then I was asked on Bloomberg. And then I had a regular thing on Bloomberg. And it was because I had to push myself outside of my comfort level. Seriously, I'm still an introvert. It's just I have to force myself to do this. But it's all part of the journey. And I think this is a great journey, never a destination, just like the market. You never figure the market out. It always has twists and turns. To me, it's fascinating. It's a living, breathing thing. And I love to learn it.
Thank you so much for sharing that story. Honestly, you sound a lot like me because that's what happened to me. I was never interested in the market. I liked money. I owned businesses of my own. I liked the notion of making money and then making money make money by doing the right investments, by capital improvements, whatever the choice was. But then I think the year for me was 2016 or so. I started feeling like there was something else. I was looking for something and I couldn't find it. So I started reading book after book after book. And then I was like, well, I'm not really getting where I want to be. So maybe I need to go back to school. So then I went back to college and got my degree in finance. And then that's when it all hit me. And I remember being in fifth grade and doing this stock watching project. And I was like, wow, I really liked that when I was in fifth grade. And now here I am in college figuring out valuations and capex and betas and alphas and all the other terms that get thrown out in your industry all day, every day. And I basically did the same thing that you did. All of a sudden, I started focusing only on the markets, only on who's the talking head, watching Bloomberg on a regular basis, reading the news, following the markets, following the Fed, knowing when earnings are happening, reading up on the earnings. I remember, spending like on the big week when all the big tech earnings come out, spending hours just
It's
reading through
exhausting.
Apple.
I hate
It
earnings. I'm
is.
exhausted.
And we're
But
in that right now. I mean, Nvidia is tomorrow, and that could very well push the market up or down 200 points.
so this is
So,
fascination. You got caught by the bug as well.
yeah.
And so the difference for me is that I am not working for somebody else, talking my book, pushing a particular narrative. I'm trying to connect the data points that I see, interpret them, and then figure out where price is going. The narratives always follow price. And so that's one of the kind of distinct, I think, unique things about my approach to analysis is that not only am I got the bug, right, like you, but I am non-consensus in that I don't have to do it a particular way or a siloed approach, which is macro or fundamental, or there's a thing called quant, which I'm very into as well, which is very much options, the derivatives of stocks, which are very, very market moving. It became very popular during COVID, the zero DTEs. I'm sure you've heard that expression where you have, okay, so
Options are my game. If I'm going to
okay, so
trade
there you
anything,
go.
it's going to be an option, or
Exactly.
I'm going to write an option so that I can protect my underlying position.
Exactly. So this is my point. So they're great as overlay strategies. They're great as just that great alpha that you can get. But the point is, I didn't want to just focus on one particular thing. I wanted to be able to put all of that together. My secret sauce is actually called intermarket analysis. So macro, fundamental, sentiment, technical. Most new traders start out as technical. They're trying to figure out some patterns they can recognize, some tricks. They try and find other traders that have a particular method. So I'm bored by using only one method. And I know it's very successful for some, and you have to do what works for you. But for me, it's that curiosity of how all of it fits together. So what I found was this mode of analysis called intermarket, and it's where you compare and contrast different asset classes. And then I can find where the big outliers reside. And then I look for the triggers of when they're going to revert. So this is one of the ways that I can actually time the market, if truth be told. So I can see when breadth is breaking down in the market. I can see when net selling is greater than net buying. That kind of stuff gives me some clues. So when people say you can't time the market, that's bullshit. And when people say that you can't technically trade volatility, that's bullshit. So you might have to X that out. But the point is, I have really been persistent in that anyone who tells me you can't do something, I usually go, they must not be able to do it themselves. Let me see, right? Let me see.
Yeah.
It just ended up basically figuring out what works for me, and you figure out what works for you, which obviously is more of a fundamental bent. We bring that into the market, and it's a fabulous auction of buyers and sellers based on our viewpoints. And the biggest point I wanted to make is that there are lots of ways to make money. The trick is not to lose it.
Yeah, it's true. And I've said on this podcast in the past, that you don't really learn anything until you lose money or something costs you money. That was the best lessons I ever learned in my businesses were when I got surprised by taxes because I just wasn't prepared. I had no tax plan. And all of a sudden, Uncle Sam comes knocking and how am I going to fund that? Because I don't even have that money. Somehow that money I was supposed to have to pay taxes is no longer in my bank account. So what do I do? I definitely think that losing money is a prerequisite for making it. You have to get stung before you know how to take the next step and not go that far. Set your limits, have thresholds that you're not willing to go below or above. Set your target. That's one thing that people miss a lot, novice traders, is they don't have a take profit or a stop loss. They just kind of go into the trade and then whatever happens, they say, oh, I think I've made enough, and they just get out of it. Whereas in your world, that's not good enough. You have to have the right strategies in place. Knowing when to get out and knowing when to stay in is just as important as identifying the right trade.
I think that trading is a very personal journey. Everyone who wants to manage their own money has to figure out their willingness to spend the time, their risk tolerance. Some are risk takers, maybe too much so. Some are risk averse. And so they have a little bit of trouble actually, pushing the button. You want to settle somewhere in that risk aware domain. Some are not willing or able to look at the personal of trading. Means we bring our emotions into it. And that doesn't mean we have to block it. It just means we need to be aware of when we are in a good frame of mind or where our bias resides in wanting that particular trade. Is it ego? Is it revenge? So there's a lot that goes into this experience of trading. So I never say that there's any one particular way to make money. And by the way, time frames vary, right? Some want this long time. They're not going to touch it, right? A particular position. Others are in and out. They want to go to cash at the end of the day because they want to sleep at night. So some sling very heavy. I'm talking position size, and some are very, very small, very, very incremental. It's our personality. We represent that in our trading style, and we also bring our flaws, and we have to fix those. So to me, it's not about, it's a professional way to do it. There's so many ways to do it that we just have to be really, really comfortable that this is our trading experience, and don't listen to anybody else. You'll figure it out yourself, and then you'll be able to interpret the market much, much better in a language that you understand.
Let's get away from the technical discussion for a little bit and talk more about your business. So you said, I think you mentioned that you have about 10 people under you that either contribute in some way to the information that you send out to your clients, or they serve some other function in the business. So how is it that LaDuc Trading actually earns money? Is it because you don't manage any assets? And I assume that because you're not managing anybody's money, you're not taking a cut of any of the trades that they make. So
correct.
Is there a subscription base, or
that's it?
How do you?
It is membership based. I am the lead market timer, and I'm the one that does the trading room, but I have live trading room moderators and client engagement there. And then I post my analysis from macro to micro across all these asset classes and across all these time frames, and then follow up on it. So obviously there are positions that I'm also sharing, but I'm not the only one. So the contributors who come in also share their analysis and their positions based on their trading style, based on their subject matter expertise. Bob is an oil trader, and his father before him was an oil trader. That's all he trades is oil. Alexander is the biopharma analyst, and he's very focused on biotech and healthcare and medical devices. And he's just, so my point is, I am able to engage with them to understand what they see. Their approach is very different from mine, but I pull from that. It's fabulous, right? And then I can say, oh, technically that's a really great chart, Alexander, but it has no options, right? So you and I just talked about options as an overlay strategy or as a substitute to stock. So the point is, I'm doing that with my contributors. I'm going through and looking at what they are trading, what they are seeing. It's not going to change my stuff. But the point is, it's definitely helps the client to get a more rounded view of how professional traders do their thing.
Got it. Your subscription model is how you bring regular revenue in. Do you see yourself ever getting into managing assets or taking money in? Do you ever see that as becoming a brokerage or anything like that?
Not right now. I'm really happy doing what I'm doing. So one thing that we talked about, the mother of three, right? So when Lucas, my son, who had the stroke, and a year and a half later, he went back to school, and I started on this journey in September of 2008. And oh my goodness, that was a wild ride to start, by the way. The whole point was that I could meet them off the bus and I could work from home. And I didn't have to travel. I didn't have to be working for anybody else, but more importantly, I didn't have to travel. And so that balance of work life was key. And I loved, because they're all gone now, right? They're past college. I loved being a mom. Like, this was my destiny. I love being a mom. So me being able to parlay this, and it sounds corny, and obviously this is not on my website, but I love serving clients. I love working with clients. I love keeping them safe. I love this job. You don't even have to pay me. So for me to be able to solve the riddle that is the market, to share that and have people who want to read it, who want to engage with me about it. And by the way, there are lots of people who disagree, and that's fine too, as long as it's respectful. I learn from them. And then I seek out the smartest. And I'm always very humbled when I get an audience and then can learn from them. And I've been able to do that over the years, which has made me a better analyst and trader. So the point is, I like to serve and I like to listen. And I really like this gig. I think the focus of just trading, and it's an important one, but it's one you do in isolation. And the one that you are managing other people's money, the core is meeting expectations. So there's different stress associated with all of these hats. And right now, I am very focused on 4 fintech projects, right? All to aid client expansion and support. This is my focus right now. I'm working with programmers and developers, and as part of making the business better for clients. So I'm happy doing what I do. Maybe later, but for right now, I think I picked a career late, obviously, but I picked a career that I can do until I leave this place. This is something I can do forever. I don't have to do it for other people, right? I can do it for myself. Right now I have the energy. Right now I have the passion. Right now I have the base where I can do this and I can expand, but I don't know what the future brings because, as you can see, I kind of evolve.
Yeah. Well, your passion is evident just from hearing you talk. So just so you know, I can tell that you're on the right path because your passion is very evident. That section of our discussion leads me into the next question, which I think is perfectly timed, which is, what are the key factors that have led to your success?
Well, I think first and foremost, curiosity. I am exceedingly curious, but that's probably why I wouldn't have made it as an employee working for somebody else. I'm very curious. Curiosity is number one. Second is grit. I don't give up. My persistence level, my threshold of pain level, however you want to put it, I don't give up. And I think that's critical for an entrepreneur. I can't even tell you how frustrating it is to do fintech projects with flaky developers and with compliance restrictions. And oh my God, nobody's done this before. So everything's custom. And by the way, I'm not a technical developer person. I've never managed a fintech project before, a product before. So my point is, this is something where I am always over my skis. For me, that pushes me. And because I'm so tenacious, I don't give up. I know I will finish.
Yeah. So trusting yourself that even if you get out over the skis and get out of control, that you're going to eventually get it stabilized and get where you need to be. That's what I'm hearing.
Yes, because I also think that there's this realization that dreams are fine, but reasonable goals are better. And I have goals. I think they're reasonable, and I want to work towards them incrementally, quietly, doggedly. So I just have to get to that goal. And then once I accomplish that goal, I then make the next goal. So I always have a goal I'm working toward. This is really key also to my motivation.
I mean, that's great advice. And anybody listening to this podcast should just keep that in mind, that you have to keep setting goals, put a line in the sand. And then once you step over it, have another one that you're going to go after right away. I mean, and that's what I'm seeing from you. You since 2008, you've basically taken one step after another and learned from everybody who's been in front of you to the point now that you're obviously a professional. So
It wasn't very quickly. I think that's my pace, that everyone has their own pace, and maybe they have restrictions in their life that also will limit. I just said, I want this badly enough. This is what I have to do. And I'm patient enough and persistent enough to get there.
So speaking of goals, what are some ways that you think people could stay motivated to reach their goals or focused on achieving them?
Listen to the voice in their own head, and hopefully it's a positive one. I think that maybe it's too strong to say, but I didn't come into my voice like this until I got divorced. Now that sounds terrible, but the point is, wanting to being a strong mom, is one thing. And I was an entrepreneur already before that. So it's not like I was weak, but I didn't have a voice that was of conviction. So there were certain people I had to remove from my life. So I didn't have we call it restriction, but I would say kind of the doubting Thomases. It was very, very important for me to follow my heart. That sounds corny, but more importantly, because I knew nothing about this, and everyone that was close to me was like, no, no, no. And the closest person was like, no, no, no. And I'm like, but there's something about this. I really, really think this is for me. So having people that detract, that keep you down, or that don't believe in you, get them out of your life. Get the energy vampires out of your life, because then the voice is free. There's no way I would have this conviction, this compassion for other clients, to focus on what they're going through, to have this commitment, and to be able to speak like this. This is obviously kind of a general podcast, but then to go and do this publicly where it's not comfortable for me, right?
Yeah.
On very specific analysis where I'm being compared to mega fund managers. And it's just like, oh my goodness, it's intimidating. So the point is, I have to have a voice and I have to believe in myself. So remove the energy vampires.
That is fantastic advice. And that's the first time that I've actually gotten that on this podcast, for people to say, remove the dead weight, essentially, the people that are acting like anchors to your boat and not necessarily like propellers. You need the people that are going to push you forward instead of try to hold you back. And it sounds to me like you got rid of all those people, and then you found, wow, there was something inside of me here, and look where I've gotten now. I'm sure looking back at where you came from to where you are today is probably feels pretty good, I would guess.
It does. And I came actually far, far away, because I grew up on a farm with a single parent. So, I mean, we're talking nothing of means did I have growing up, zero. And I wasn't poor. I felt very, very rich to have family that loved me, and values from my grandparents, and growing up on a farm. I didn't feel like I lacked for anything except the confidence to really feel like I could get there, because financially there was just none of that opportunity. Now it's very different, right? I look back on that and I'm like, I wouldn't trade that. That was fabulous to have those values and people that were solid, but it was such a small little circle and very, very remote. And now I still don't need the big stuff. I don't need I've been in the same house for 25 years. I don't need to show, be loud about money. I don't have any interest in that. Zero. I think you still bring yourself forward. And this to me is intellectual and very satisfying and soulful when I can help other clients. And I love to figure out the puzzle, and I love to be able to express my voice, and I love to grow the business. So to me, this is just the journey that I'm on, and who knows what's going to happen in a few years when maybe something else opportunity comes about. But for right now, I'm thinking this is a good gig and I want to keep expanding it.
That leads me to my next question, which I'm excited to hear your answer to, which is, what is your definition of success?
First thing that came to mind was being true to yourself. And that means being able to know what your weaknesses are, and you got to work on that, knowing what your strengths are and playing to that. I don't care how society measures it. It's certainly not financial. So I think your question, after I just shared with you that I am very satisfied, right? It isn't,
Yeah.
money does not motivate me, which is, I know that sounds so weird, but being right and winning for my clients, I am totally motivated by that. The definitions of success is being respected. That's very important to me. I love being trusted. I love being respected, but I don't really have an answer for that because as long as I can keep doing what I love and being true to who I am, doing it my way, that's successful. I have goals. I have monetary goals. I have, things I want to do more of in this financial services arena because I am still under the radar for sure. I'll get there.
So I have a difficult question for you. And if anybody who's listened to my podcast knows that I have mostly women on this show, I'm not sure how it ended up like that, but you are joining the ranks of some strong, badass women who have been on this show before you. So I want to ask, you said you love being respected. Has it been difficult for you to get that as a woman in this industry?
Yeah, that'd be yes. So
That's a yes.
that would be
Talk about that a little bit. I'd love to hear just some of the hills or mountains that you've had to climb when you shouldn't have had to if you were, I guess, a man. I mean, I don't know how else to say it, but
I remember being very resentful growing up because I was a woman. And it wasn't that I was a woman versus a man. It was that I didn't have the confidence or the voice that I could see men had, even if they were arrogant and full of BS. It was just, there was this system they were using and I didn't understand it. So for me, it was very, very frustrating. Honestly, I felt like I would have been extremely successful CEO if I had been a man, kind of thing. Like nobody's going to notice me. I don't have the money to go get the great degrees and, the great sponsors and the pedigree to get noticed. I don't come from any of that. I'm actually pretty socially awkward, if truth be told. I'm really way shy. And that's one of the reasons why I forced myself to do interviews and live commentating every day, is to kind of get over that, girl. You got a voice, you got to use it. So the point is, I resented for a period of time, I'm just not going to have the same opportunities, because everywhere I look, you need to see what you can be. And so especially in financial services, when I was getting into this, and you've got the statistics, you can look it up, 89% of RIAs, men, 1% of hedge fund managers are women. So the point is, it was really, really, really hard for me to see women that were trading, let alone running a trade business, a trade education business. Very hard. So I was actively looking for them, and then I was accumulating them. I was growing my list. And then literally COVID happened, and it was an explosion. And the changes that have happened in the past 5 years have really benefited the roles that women have played and the public roles that they have played. And I am so impressed. And then the clients that I have, and I have 2 young women, they're 26 and 27. They're so smart. I cannot wait to see what they're going to be like in 10, 20, in their careers, because they're off the charts already. High EQ, high IQ. They're I had to work really hard for this. So they are inspiring me of what the next wave of women in finance and trading will be. But I will say that it has been incredibly hard, because my analysis is stellar, but trying to get recognized when so many of the, especially in macro analysis, macro fund managers, oh my God. So this is so painful. I mean, it's beyond painful. So I'm either shut down, talked down, blocked, discredited, talked over, or just completely ignored. It's been really hard. And I don't react well to that, honestly. And I've tried to also...
Oh, you? No way.
No, it's actually, now it's like water off my back. I just, okay, I'll block you back. Stupid little, anyway, the challenge is that I really want to learn from others, but not be disrespected. And they don't really have that, many of them. It's a ego, it's a territory. They're
Yeah.
protecting it very, very strongly. So, and I'm in a male bastion. I mean, this is not like the medical profession has a lot of female, like percentage wise, doctors, right? Or even, I'm not talking overall aggregate medical. I'm talking about the highest paid positions in administration and in the medical field. The same thing with lawyers, but financial services, no, 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 no. It is still largely men, dominated by largest CEOs, largest companies are male dominated, largest trading firms, largest every firm that has to do with financial money management is run by men. And then all of those that are ancillary feeders, if you will, of analysis and education and trading are also male. So it's been really, really, really frustrating, but I've been encouraged in the past 5 years, especially since COVID. Women have hit the scenes, man, and they are very, very competent, fast learners. And I'm excited about that. I'm excited about the wave of new women coming into finance and trading.
That's great to hear. And congratulations, because I can only imagine how difficult it was. I honestly think that that might be one of the chips I have on my shoulder because I'm a minority. I know I look like a white guy, but I'm a minority and I didn't get a lot of the things that the people around me did growing up. I didn't have the lineage to fall back on. Nobody owned a house in my family. We're first generation immigrants into the country. So it's been a chip on my shoulder my whole life. And I think it's similar to what you're describing. And not only that, but I was raised by only women. I mean, my grandmother and my father disappeared, and my mother and grandmother were the ones that I always looked up to. So naturally, my podcast just on its own has become very woman centric. And I'm totally fine with that because I think that's one of my greatest differentiators is because when I see a woman walk in the room, I immediately stand at attention like, oh man, here she comes. Versus men just look at them like, oh, this little girl, what can she do? I mean, the strongest people I know in the world around me are all women. So
That's
with
great.
that being said, congratulations to you and keep fighting. Don't let people who look like me treat you any worse, any less than what you're worth, because from what I can tell, you've definitely got it sorted out. Good for you. And
Or
you're
I've gotten to that point where I just honestly, I don't care. So now it
right.
doesn't, if they pick a fight or they attack, it's now I know it's their insecurity. Now I know that I've got this. So it doesn't,
you won basically
but
because they're already
also,
defensive about you.
exactly. So, but I
Yeah.
used to care. Now I'm not as so affected. But that's
Yeah.
maturity, right? That's happens as you deal with whatever comes down that you don't like. How do you deal with it? You figure out a way. So that's
Yeah,
it.
definitely. Now that we're kind of talking about where we came from and the things that have happened to us, if you could go back into a time machine and talk to your younger self, 10, 15, whatever age you want, if you could go back and talk to that young woman, what would you say to her that would make the biggest difference in the path that you traveled?
That is so hard. I really
Yeah.
don't like this question because there are lost, there are so many phases. And because I am not even resembling who I was at 16 or 26 or 36 or 46, it would be advice that I would give each decade. So I would have
Okay.
advice for each decade because
That's a
there's
fun twist. Let's hear it.
but I can't. I'm trying to,
Yeah.
I'm trying to think like, okay, 16, don't be a punk. Like I would have advice, like, don't, I mean, seriously, I should have had much more confidence or trust in my ability. It took me a long time. And then in my 30s, don't compromise and keep this suffering going, cut it out early, right? So they're just points where I could give myself advice for each decade. One advice that I give clients is one that I also take, and it's personally and it's financially. It's don't risk more than you're willing to lose.
Good advice.
And I think I came up with that one probably in the last 10 years, which would have always been good advice, but especially
Yeah.
10 years ago, don't risk anything more than you're willing to lose. And I think that's really great advice for trading. And some, like I said, we've already talked about this, right? People too big a position size, or, they don't look at the losses, or, whatever. That's a great piece of advice for trading, but I think it's also great advice for life. Don't risk anything more than you're willing to lose. It's okay to risk. You got to. That's how you live. That's why we're here.
Yeah.
Right?
Yep.
It's to experience and grow and become the best version that we can become. But don't risk more than you're willing to lose.
I love it. I wish that I could go back and tell myself that, because I've risked a lot of things along the way. My health, the decisions that I've made, the purchases that I've made, whatever they might be. If I could go back and just say, look, you're going to have to pay the piper someday. So don't make the wrong decision now that's going to lead you to a place that you don't want to be. So I think that all the generations of younger Samantha would appreciate that advice. So thanks for sharing that one. Now that we're playing the way back machine, do you remember what the first piece of money advice that you ever got was?
Scarcity.
Okay.
So this is not advice I was giving. This was just the absolute thinking, because I grew up upstate New York, Adirondacks, and my mother was a fifth grade teacher and single. It was very much scarcity, scarcity, scarcity. It was not about abundance. It was not about thinking about how to have abundance. It was how to live within not only your means, but very, very humble means. And I just went to a family reunion recently over July 4th weekend, and, in the middle of the Adirondacks. And I love it. I love the people. Just I don't want to do it all the time, but I want to go back and I want to reconnect. And my mother, the whole thing is just focused on this mindset of scarcity. And so I had that as an absolute repeating mantra. You can't go to law school, you don't have the money. You can't do this, you don't have the money. Just think fixed income, just think minimal, no joy, no travel, maybe camping. It was, but I grew up like that. And it was only, again, kind of getting my voice, that I'm like, oh, no. This living within scarcity mindset, I'm done. And it doesn't mean to go out and, spend crazy money or do crazy things. It just means, no, this is not a problem that I want to live within for the rest of my years. I understand why they do and why they did. This is just not me. So I'm able to go from that scarcity mindset, which I had for decades growing up, into now abundance, which is just, I can create it. I'm not afraid. So that's very, very different. But that's not advice I was given. That's just the environment I was in that I had to grow out of, because I could see people who had that abundance mindset. And I'm like, how'd they get that? Where'd that come from? Because I didn't grow up like that. So that's what I mean.
Well, that reminds me of a money lesson that I got when I was a kid, which is money doesn't grow on trees. That in a sense is like scarcity, right? Like you look at somebody who has everything and you're like, man, they must have a money tree in the backyard. But in reality, it's just that they have an abundance mindset, whereas we look at them and say, oh, I could never do that because we have a scarcity mindset. So I think that even though nobody specifically told you, this is the first piece of money advice. Are you ready, Samantha? Scarcity. Like, even though they didn't do that, you still got that lesson from it. You found a way to be humble and take time to talk to little old me
But that's a scarcity mindset, right? So I had to get over that too. I mean, I am so grateful that you think my story matters or should be heard. That is hugely, I'm filled with gratitude over this. So for me, I think it's an honor to speak with you. And I don't feel like I'm anybody. I just happen to have evolved the way I have, and maybe it resonates, and I hope it resonates with women who are figuring out how to manage their own money. That's really what I wanted to be, as again, for younger women especially, but I'm 56. I'm not trying to invent something here. This is just trying to be true to myself, but I hope that it creates some relevance to an audience that might want to pursue something they think is bigger than their ability. They will grow into it. You can also change your mind, or that they have challenges and they have to just stick with it. Don't give up. And I think the biggest thing in anything, but especially becoming a professional in my business, right? It is so easy, as you know, trading comes with losses. It comes with this feeling of, I'm not worthy. It comes oftentimes with a string of losses that enforce that negative thinking, I'm not worthy. And then folks give up. Instead of, this is a job. Okay, that didn't work. Why not? Next. Oh, that didn't work either. This one did. What was the difference? It's a job. I look at it as a job. Next. Doesn't mean it doesn't hurt when I'm wrong.
Yeah.
Doesn't hurt, when I'm right. Actually, it does, because then the confidence, it tweaks a little bit. And then you make a bad decision because you've got too much confidence. And it's always trying to weigh that balance sheet, really, of greed and fear. It's a constant weighing of the balance sheet of greed and fear. So I think that's also personally, right? They have a dream, but they're fearful they won't make it, or they're not good enough. So all I'm trying to say is just like, talk to yourself more kindly, that you are worthy. I am worthy. We've got to go do what we got to do to get to our next goal, and don't give up.
I appreciate you saying that to me, because that is one of my biggest problems. Is I have the worst self-talk that you maybe ever met anybody, that they talk to themselves the way that I do. And I wasn't doing that just then. I was more or less just saying, like, to me, where I sit, you seem like you're up on a much higher pedestal than anybody I've spoken to before, and myself personally. So to hear you just say, I'm just a regular person, like, that's how I feel too, is I'm just a regular person just doing what I enjoy. Like podcasting, having these conversations gives me the same type of joy and happiness that I think trading gives to you. For me, like, this is my happy place right now. But the one thing that makes me the happiest is what we're doing right now.
I love that. That's
Yeah,
awesome.
so
And
that's
you've
the
got
little
diversification. Look at you. You also have
yeah.
multiple ways, of revenue, which is very important. I think people need to have multiple avenues, multiple streams of revenue. I think that's also very good advice.
Yeah, no, you're absolutely right. It can't just be trading stocks, right? It has to be
Correct.
some real estate exposure. You need to
Yep.
have potentially a 9 to 5 or a business, like you
Correct.
have,
Yep.
you get the opportunity to bring all different streams of money in, and it makes you much more well-rounded and much more resistant to things like COVID. Thank goodness I have investment property, because if I didn't, I probably would have been hurting, because my restaurant did decrease in business like
Correct.
70%. So I'm going to change up my next question a little bit, because it generally reads, what are some of the biggest mistakes entrepreneurs make in their businesses? But I'd rather ask you, what are some of the biggest mistakes that traders make with their money?
I think they're actually very similar to what entrepreneurs do. So in being an entrepreneur, I think of it, I don't know why I always think of three legs of a table, but you probably see this theme, right? So you really need to have some subject matter expertise, and it would be very helpful if you're really, really good at it. So number one, that focus of skills, and then constantly learning so that you can be the best at something. I think that's very, very, very important. The second thing is that you're in an industry that's growing, that values those skills. So trading is a growing business. Real construction is doing fine. I mean, in other words, you have to be in something that is economically in an uptrend versus a downtrend. That really helps, right? So it doesn't matter how good a builder you are. If we're in a recession, it's going to really, really, really suck. So the industry really matters, the direction of that industry, your place in that industry, your skill set in that industry. And then the third leg of the table is managing money, cash flow. Cash flow for a business, it's life or death, period, end of point. How you take on debt, how you service that debt, how you take on employees and your operational efficiencies, how you plan and invest what profits you make. It's all about cash flow as far as I'm concerned. So the same thing with trading. The same thing with trading is exactly, okay, Is the market going up or down right now? How am I positioned for it? What are my skills within it? Am I more of a short duration or longer duration trader? What am I, you got to find out what you're really good at. Is it technicals? Is it fundamentals? Is it macro? Whatever. And then of course, how am I going to manage the losses? How am I going to manage the cash flow? Because now my money is stuck in these positions that aren't producing. And here are the hits that I'm going to take if I offload them and put them into what I think will produce. You've got to make tons of trade-offs, compromises, choices, but it all comes down to managing money, cash flow, just like an entrepreneur. Exactly like an entrepreneur.
Mhm.
I mean, it's a little bit different balance sheet, but the mindset is the same. Concentration risk, all those things, they absolutely apply up, downturns, how am I going to manage that? It's, I think, the same. I see entrepreneurialism very, very similar with trade management. Risk management in a business, risk management with your own money, focus on it. Don't leave it for somebody else to do.
And I never really thought about the similarities between the two, how being an entrepreneur is very similar to investing your own money in a sense where, you need to identify what your goals are. You need to have stop losses. I mean, for me, that's the biggest lesson I've learned. I can confide in you. The biggest lesson I've learned is stop losses are necessary with every trade, because if not, they could get out of control very quickly, especially when you're playing with options because they're levered up so much. Always know where the bottom is and don't get too close to it because you might fall through.
And like I said, don't beat yourself up if you don't hit it. The hit rate
Yeah.
is actually not important. Ted Williams, 400 was stellar out of 1,000.
Yeah.
As traders, as anyone who manages money, it's a 100% injury sport. There will be losses. It's not a question. It's how we manage them. That's all that
Yeah.
matters. It's really not a game of perfect. And I say that a lot as well. It's just not giving up. It's just keep grinding. Don't give up.
Yeah. That's perfect. And have that grit, like you talked about, that you have. Grit is a very important element for anybody to have, no matter what you're doing, whether it's being an entrepreneur, trading money, being a parent, whatever it is. You can't give in to your kid the second that they throw a tantrum in the middle of Walmart.
And some people have an easier time saying no. And so that's also a good one. Warren Buffett said, I'm successful because I said no a lot.
Yeah, I have seen that quote from him. And he also says, only invest in things that you understand. That's one of my favorite quotes from Warren Buffett, because I invest in a lot of things that I don't understand. So I'm not really following his advice, but the things I do understand, oddly enough, are my best positions.
You're not
Okay.
married to a bias, but anyway, okay.
We are kind of getting close to the end, and I appreciate your time so much on this. There's just a couple of questions left I have, and I wanted to also ask you a couple of market questions just to take
Okay.
your prediction on it, because all the talking heads throw their things out, and I want to hear what you have to say. So one of my next questions for you is, what's next for you in your career or your life or your business? What is in the next 2 years for you?
So I don't look that far ahead. I don't look that far ahead in the market, honestly. I am very much in the prediction business, but it's more along the 3 to 6 to 9 month time frame. So I have very specific goals and I'm always with goals and I'm working towards those goals. And once I finish these fintech projects, which should be this year, and that's all I care about right now. It's all I'm focused on. Serving clients.
So talk about that.
Is that
like an app or something that you're building for
Yes.
your business? Okay.
Yeah. I've got 4, but yes, they're all related to the business and I just want to finish them. And there have been very, very challenging. So,
Yeah.
but I'm not giving up. Oh, so anyway, that's only part of the question, but I am really not looking 2 years out, if truth be told. I'm just foot in front, next foot.
Yeah.
Yeah.
They're going to get these fintech goals done, and then from there it'll be on to the next goal once you define it.
Correct. Yep. I'm not jumping ahead until I finish this job. This job is in front of me. I finish this one and then I go to the next.
Yeah. Obviously, to learn everything that you've learned, you've probably listened to a lot of people, read a lot of books. Wondering if you could tell me somebody who you admire and respect and why you do.
I have, sadly, or maybe not, no role models. I don't worship or desire to meet any celebrities. I have clients that are impressive. I have colleagues that are impressive. I have obviously followed very successful fund managers, sadly, all men that have been very successful, but I have no interest to have dinner with them and learn what I need to be a better whatever it is I want to be in the future. No, I can take stuff from this interview. I can learn from you. Everybody that I read about, everyone that I talk to, I learned something. So there isn't anyone that has the kernel of the corn for me of advice. And it's, who do I respect? I want to respect myself. I want to respect what I can be and the best that I can be. So I really am very focused on that. I don't have anybody who is a big promoter of me or supporter of me. I do that myself. I don't have anyone that I want to emulate. I want to do my own thing. I don't have anybody that I look up to or check their tweets to see if they've said anything. I have no obsession over anything or anybody other than the market. So, and my children.
Yeah.
But that's it.
I mean, I think that's a great answer. So you are good where you are, and there's nobody that you have around you that you're like, I want to go be like them, talk to them, meet them, whatever the case may be, which I think that's cool and good for you because I have some people that I look up to, but maybe not even for the right reasons versus you, who you know exactly who you are and what you want, and you don't necessarily need to aspire to be like anybody. It's
I don't
awesome.
covet what they have either. I think that everyone kind
Yeah.
of comes into their own brain power and their own manifestation of wealth and their own personal folks that they assemble around them. It's just a very different experience. I don't have a great answer for that except to say, I don't need that. I don't want
Yeah.
what somebody else has. I want to earn it myself.
So now the fun part that I've been waiting for. Let's get into your world, and I want to ask you a couple of questions. So my first question is did the Fed make a mistake not cutting in July? Basically, the market believes that they should have cut rates. And if you look at what the ECB did, they cut rates right before us, and maybe they did that because they thought we were going to cut. But now you look around and I've seen a little bit of dollar weakness since we didn't cut. So I'm just wondering if you thought, because I actually predicted at the beginning of the year that they would cut in July and they didn't, and it seemed like they were going to. So do you think they made a mistake not cutting in July? And then the follow up to that is how much cutting do you think is coming this year?
So it's interesting that we're talking about interest rates because we talked about this from the beginning where it really, really matters. So let me back
Yeah.
up a little bit to answer your question, which is we have had a very strong rate hiking regime that paused, was announced basically that they were thinking about pausing in July of 2023. And then Powell officially announced November 1st of 2023. That sent the market higher, right, with expectation that tightening would end, but it didn't help emerging markets. It is still very, very much a telltale sign whenever a central bank cuts, like we've had over in Switzerland and Canada and UK and except everywhere basically in the world except Japan, that there is a global credit demand that's falling. And credit demand is very, very important. When it's expanding, economy can expand. When it is contracting, economy will contract. And we're talking world. So the fact that we've had global rate cuts and the Fed had not cut meant that the other countries were devaluing their currency as a way to compensate. So that is now this Fed behind the curve causing trouble because it really did trigger what's the yen carry trade unwind. And I know your audience will be like, huh? But basically, this is something that has to do with a lot of leverage in order for very large institutions to take advantage of low interest rate loans in countries like Japan, and then they invested in high interest rate yielding products here in the US, or assets that are inflated like NVIDIA stock and basically our stock market. So that's basically a carry trade that will end when the Fed starts its cutting regime. So it's actually negative. It's actually trouble. So they should have started already cutting, and the fact that they are behind the curve and that leverage has gotten out of control, so much so that, for example, NVIDIA, their market cap is over 3 trillion, right? Maybe tomorrow it'll be 300 billion more. But the point is that's 8%. That's 8% of the US GDP. That is
Crazy.
more than many foreign countries' GDP, right? I think Japan is probably 4 trillion. So the market cap of NVIDIA alone is soon to be the size of Japan's GDP. The point is, we have gotten very, very ahead of our skis as it relates to valuations. And now that inflation is starting to fall, and it has been, the rate of change in inflation has started to fall, which is how Fed measures its effect from its tightening. It does not mean that our food bill has gone down. So inflation for Main Street compounds. So every year, especially since COVID, we just keep seeing incrementally higher costs in healthcare and insurance for our cars and our houses, right? And groceries. So we got like a 25% entrenched or structural inflation rate that is cumulative. It's compounding. That's not how Powell and the Fed or Wall Street measure inflation. They measure it from a basket of goods and its rate of change. So we had 9.1% in our consumer price index last year, and it's now below 3%. That's a rate of change that's falling. So the Fed should have cut. They are behind the curve. Our leverage is extremely dangerous. And so as rates fall now, and they have been falling, as you know, right? Especially if you follow the markets, you know that it's kind of a beautiful thing that mortgage rates have come down from 8% to 6.5% roughly. Okay. But the point is that's actually a telltale sign of future trouble. So we will have a refinancing wave, and that's actually one of the triggers for banks earning less net interest margin. It's all bloody related, and they lend less. There are fewer jobs. If we have oil come into the picture and fall, all of this is going to support deflation in stocks. And stocks, as you also know, are a huge wealth effect for individuals and also companies. So as stocks start to fall, then wage growth starts to fall. And then the Fed will have to play catch up and start to cut aggressively because we will enter a recession. So that's how this 10-step dance works. And it starts with global credit demand falling. And that is a telltale sign of why central banks started cutting and Fed waited. So the long answer to your question is yes, they should have cut earlier. Now they are. We're going to have more equity weakness in 2025 is my baseline bet, and probably of size.
Just so that I can, in my own way, unpack what you just said. Once they start cutting, does that mean that the other economies and the other countries in the world that are taking lower interest rate loans and investing them at higher yield in the United States, once we start offering a less attractive yield, are they going to pull that money out? And
That's
so if
correct.
they pull that money out, then where does the water go after it circles the bowl? Like, what happens from there?
It's called repatriation. So literally, Japan with its $1 trillion in US treasuries, or China, let's say $1 trillion in US dollar denominated assets, mainly equities, because they have been paying less and less in their US treasury and they don't buy for a while. The point is, yes, that's what happens, is they literally convert and they take their money and they go home. So that is a liquidity drain. And that is what causes prices to fall in stocks. And that's one of the things. There's liquidity that came from quantitative easing, which was lots and lots of printing, right? 9 trillion from the whole COVID extravaganza between the Fed and Treasury. And now we have the Fed running down its balance sheet very slowly. If we come into trouble, they can always go back and print some more, but that's not good. It's diminishing, rate of return, and it is very inflationary. So yes, to answer your question, that carry trade unwind is liquidity removed from our equity market. So that is the danger. And we already had a precursor, kind of like a tremor, right, on August 5th, when our volatility index hit the third largest print ever.
It was like 40 something, 44. I don't remember what it got.
No, it was 67. So at 67 pre-market, and it also fell the fastest, which is telltale sign. It usually takes weeks and weeks and weeks for volatility to ebb. It basically spikes up, which is an indicator that investors are grabbing for protection, for hedges, right? Because you just can't sell everything. Big firms just can't go to cash. It's very, very destabilizing. And then it takes weeks and weeks for VIX to come back down. It happened in days. So we have more instability in the market. The market structure is starting to get more wobbly. So yes, the Fed should have cut, but they're not cutting. And you know why?
I think I do. Yeah, they didn't see the inflation coming down, and there's not high enough unemployment.
That's a technical answer. Correct. They're waiting for the rate of change in inflation to get down to a target, and they're making sure that the labor market is still very, tight or strong. But that's not what most would say is, most pundits, I'll say pundits would say is the reason. It's because it's an election year. And so the election year is very motivating to make sure that the market doesn't have a big swoon, or if it does, they come in and protect very quickly through policy interference, which is exactly what we had, that allows the market to continue going up, which is a wealth effect and makes people happy as they go to the polls on November 5th. And it's very important. It's very typical. So this is an election year. This is typically what happens.
I happen to know that this week there's at least $100 billion worth of new credit being issued. I don't remember the exact numbers, but so now that all this new credit and this new bonds are coming to the market, is that selling? Like who's buying that?
I'm not sure what particular auctions you're referring to, because there's a lot of supply, first and foremost, that the Treasury needs to provide to fund the ever rising fiscal deficit. So that's really the key job for rates and dollar control, the Fed with Treasury. They're in cahoots and collaborating very, very tightly on this. But basically, as the fiscal deficit increases, Fed Chair Powell and then Treasury Secretary Janet Yellen, she has to do the job of funding it, right? So she has options between shorter duration bills or longer duration notes and bonds. She should be doing more notes and bonds, but that is another way of taking liquidity out of the system. And so bills have been the MO, they have been the vehicle, and that has been liquidity providing. So a particular note, for example, the 2-year note right now has fallen, and that's actually a precursor to Fed cuts. We've gone from 5.8 to 4.2 to 3.8, whatever. We've come down a good deal in the 2-year, which is the short duration. And that is very, very indicative of a Fed that is about to start an aggressive Fed rate cut regime. Right now, we just have 3 expected into end of year, but I would not be surprised if that starts to pick up speed after the election. And the 2-year is actually a really good tell of the direction. If you follow the 2-year, it's actually an excellent tell. So that's the easiest way to look if we're getting in trouble, is to follow the 2-year.
Got it. I could sit here and ask you question after question about this. I know that you've had a long day, so I appreciate you indulging me even a little bit with that.
talk too.
Yeah.
I'm glad that you're interested in all this stuff.
I'm so interested. When Liesel told me that you were owned a trading company, I was like, stop it. No, she doesn't. No, she was like, no, really. I hung out with her the other day and she wouldn't get off her phone because she had all these trades going.
That's
So
that's
basically
lethal.
this is
That's
like my
lethal.
dream conversation.
That's lethal. But I
um
mean, just keep in perspective that I have my own interpretation of the data, right? And I have
oh
uh,
yeah.
I'm focused on this global leverage unwind, but it's not a timing. It's very hard to time because we need a macro trigger. My day-to-day job is sizing up the best stocks, long and short, and how to play that using options. So it's much more focused on tactical trading. It's what we're
Mhm.
talking about is the backdrop of what I'm looking for and what I look for tells and how I interpret the data from a macro standpoint when I'm bullish and when I'm bearish. And July of 2023, I was never one calling for recession because wage inflation delayed recession. Inflation
Yeah.
first comes in and then wages are lagging, they catch up. And that's what helps spending. And 70% of GDP is consumer spending. So I was never one who was like ringing the bell about recession until this June. I'm looking ahead at a year and a half out now. I can't do this for stocks, but I can do this big picture because macro is a lagging and then it catches up very quickly. So that's what I do on the macro. But for my day to day, it's, what's moving, why, and how to trade it. Very, very tactical.
So you're generally bearish right now then
I
over
am
the next 12 to 18 months?
not until year end. I think into year end, we got a lot of sideways chop. Again, the election is going to be
Yeah,
very,
the
very
election, yeah.
important. Fed and Treasury, they're politically driven, in my strong, humble opinion. And so I don't think they're going to let the market fall apart. And this is also the wealth effect creates tax revenue, right? They need
Yeah.
these tax receipts because they are what, 35, 36 trillion now? And it just
Some
keeps
kind of number like that, yeah.
and it just keeps growing. So they have to have this come in from somewhere since taxes have not been passed and tariffs don't derive any tax receipt for the government of size. They just are actually a
Yeah.
huge debt. They're the opposite. They're bad. so
Yeah.
so so that's it. That's I have now a bearish bent, but I think it's going to be more toward the end of 2025. I just keep watching it, but
Yeah.
that's my
So do
my
you think we'll
worry.
go under 5,000 in the S&P, like that much bearish
Oh yeah.
sentiment, or
Oh yeah.
oh, we
We'll head
will?
back to 4,300 easy,
Okay.
and then we'll see. So think about that. The Fed initially, not initially, last announced its pause officially on November 1st, 2023. And Yellen also came out with what's called the quarterly refunding announcement. And she issued more bills and bonds. We were just talking about that. And we had a massive short covering rally that was already building up speed for 3 months during last summer. So we had the perfect storm of animal spirits, right? And we had NVIDIA and AI was still hot and heavy. Long story short, that's over. That's why it's very easy for me to say, oh yeah, we're going to go revisit 4,300. That's where we were on November 1st. We're going to unwind. And we just dropped 500 points in the S&P in a few weeks in July.
Yeah.
That's not hard to imagine we can go back down to 4,300. But we're not done topping yet. It's a process.
Okay.
Tops are
Yeah.
a process. Bottoms are an event. And bottoms are typically event-driven policy interference. Every bottom that we have had in present years, from I don't care if it was the repo madness in 2018, the COVID low, the October 22 intervention, the March 2023 intervention, the November 1st, 2023 intervention, they were all policy interference of monetary and currency. And that's how it goes. So we top, market then sells off, right? Stairs up, escalator down, and then they come in and they put a floor in. Unfortunately, it's pretty scary in the falling process. So that's my job to time when we're going to next have a correction. And I would say
Yeah.
it's going to get very, very interesting in 2025, especially after the election.
Well, after this conversation, I'm definitely going to become one of your clients. I'll subscribe and get your regular newsletters and information
I'd
because
love to work with you. You're sweet.
yeah, you're killing it, honestly. So, with that being said, Samantha, this is basically the end of the show. Really appreciate you taking the time to talk to me today and getting to know you. Like I said in the beginning, you're the first person I don't know at all to ever have on my podcast. So, hopefully, I handled it well. I'm sure that my listeners might hear some of the nervousness in my voice. And as I edit this, I'm sure I'll hear some of my own nervousness. But no, you've been a fantastic guest,
Thank
so
you.
intelligent, very well spoken. Clearly, you understand your industry and your business very well. I would love to just give you an opportunity to let my listeners know where they can find out more about you, can get in touch with you for any of your advice or business. So go ahead and plug yourself however you like.
Oh, well, thank you very much. Well, Samantha LaDuc, LADUC, and I have my website, LaDucTrading.com. I have a Twitter handle where I do more of the macro thinking, but that's at Samantha LaDuc. And I even have a Substack at Samantha LaDuc. So my contributors, however, all of us are at LaDucTrading.com. So you just have to go there and you can kind of get a better feel. But I'm really glad that you invited me and we could share not only stories and mind meld on all kinds of personal and also trading journey, but I am very excited that you're passionate about the markets. That's very exciting for me. I'm glad to meet you and glad to work with you.
Thank you very much. Well, yeah, I will be in touch 100%. And once I get this edited up, I will send it your way and then you can share it with your followers. And so people can hear our conversation today and get you to know you better because your clients maybe only know you as, the data gal, the one that knows everything about everything, but they may not get to see you in this light.
No, I definitely, we talk shop.
Yeah.
There's a lot of shop to talk. So we just talk shop.
This is After the Checks Are Signed. I'm DJ Garcia. That's Samantha LaDuc, and we will see you next time.
Subscribe to LaDuc Trading YouTube channel for more content from Samantha and her team.